All right. Welcome back to another episode of the Real Estate Investing Club. Today we have Greg Butcher with us from Blue Sky Equity down in sunny California. Same time zone partners. I love when people come on the show that are in the same time zone as me.
Thanks for having
Greg,
me on, Gabe.
yep. Greg is a multifamily guy with over 1,100 units. They've done 160 million assets under management. So Greg has the experience. Greg, thanks for hopping on the show.
Yeah, absolutely. Thanks for having me on, Gabe.
Absolutely. I told you before we got on here, we like to start with stories. So why don't you take us to the beginning of your story? How'd you get starting in real estate?
Yeah, sure, absolutely. So I started off as a single family guy back around 2005. I most of my adult life, I was an active duty officer in the Marine Corps. So I was doing that while I was moving from duty station to duty station, trying to buy a house, turn it into live in it, and then turn it into a rental. And I moved away. And I found out real quick, I had bought a few houses just before 2008. Yeah, it's tough to scale. And there's this thing called a market cycle. And I bought a couple of houses at the peak. Exactly. So a lot of lessons learned. I called those my learning properties, but I was trying to figure out how to scale. And that's when I found multifamily. And that was my aha moment. I was like, oh, forget single family. I don't need to figure out how to make that scale. This is a lot more scalable. So
makes sense.
Yeah.
So you got kind of caught up in that 2008 issue that a lot of people went through, huh?
I did, but it was okay, and I learned this first big lesson, which is the same thing we're going through on a couple properties now, and a lot of commercial owners are going through right now. That as long as you can cash flow and you don't have anything that compelling you to sell, you just ride it out and wait until times are better.
Absolutely. Cash flow is king. And we always say on this podcast, you guys, when you underwrite your properties, be a little bit conservative. I know sellers are difficult to work with sometimes. They want the moon for their properties, but if you underwrite and you aren't leaving enough cash flow to deal with the hard times, then you might have to foreclose on that. Nobody wants that to happen. So love to hear that, Greg. So you started in single family. At what point did you actually decide to move into multifamily? What was like your first deal?
So I heard about it. First off, I went to an REI Expo in late 2013 and heard a guy talking for about 45 minutes about multifamily and syndications, and that's when my eyes were opened and I started moving that direction. I joined one of the programs. It took me a little bit of time because of my military duties, but just as I was getting ready to retire off active duty in 2015, I joined one of the educational mentoring programs. Got my start there. That first year, I just invested passively to put some of my money to work while I understood the underwriting and learning about the industry and how that all worked. And then my second year in that program is when I buckled down. It's like, okay, now I need to, get my money's worth out of this and start being a general partner on deals. So Nice. It took me a few months after that before I got my first one, but the first one we got under contract the summer of 2016 in the Phoenix area. It was a 120 unit C-class property.
Very cool. Your first one was 120 units. Nicely done.
Yes, sir. So that was one big thing I got out of that mentoring program was the idea of scale, and you don't necessarily have to start off with 4plexes and 6plexes and 8plexes. Again, that's the power of syndications. Group purchases lets us buy something bigger than what any of us can do on our own.
So the first deal, a lot of people, you just like you said, they start out small. I started out small, and small. I've said this so many times on this podcast. It's actually more dangerous to buy smaller properties than it is to buy bigger properties, because smaller properties, if you have one thing go wrong, your cash flow is gone. Yep. Like I bought a 44 unit self-storage facility. I had a couple doors that I needed to replace, and that's all the cash flow for that month. It's a big problem. So going big is actually safer, contrary to what a lot of people think. So when you did that first, what'd you say, 120 unit, how did you guys finance that? It's first deal. That's the first hurdle that people kind of run into, which stops them from going after those bigger deals, is the capital. So how'd you guys go ahead and take that one down?
Yeah, absolutely. So I partnered with two guys who I'd met in that mentoring and educational program that I joined. And they had just done their very first deal as sponsors a couple months prior. So it was my first one, is their second, but they didn't have the history necessary to get the loan all on our own. So we brought in some more experienced partners to be key principals and guarantors on the loan, basically, so that we had that experience on our team. They weren't part of the general partnership team, but they were part of the loan guarantor team that helped us get that. So we took out a Fannie Mae agency loan at the time. This is back when everything was being offered pretty much 80% LTV. We actually financed part of a rehab on it, so it was 80% LTC. Wouldn't do that these days, not that you could, but back then that was pretty standard. We were in the middle of cap rate compression. Prices were going up, and then that left us with about just under $2 million worth of equity that we had to raise from limited partners, including ourselves investing our own money in our deals too.
Nice. And did you guys just raise from friends and family? Did you put out, I don't know, do you guys have a good big following on social media that you use? How'd you go out and actually raise those that 2 million?
Yeah, back then we did not have any kind of following on social media or anything like that. We didn't know what we were doing back then. So it was friends and family, but also the other members of that of our networks, including that educational mentoring program. So there weren't as many deals being offered back then as there were later on. So we could still raise money from within that network. So.
Yep. Yeah. I mean, I've heard it so many times on this podcast, on other podcasts, everywhere in business. Your network is your net worth, which is why relationships are key for real estate, for business in general. Just keep developing those relationships, and they'll help you out throughout your whole career. So you did that first deal, that first 120 units. That was in 2000 and what did you say, 2016?
That was 2016. We sold it about 28 months later in early 2019. So
that's a quick turnaround.
It was, but we exceeded our 5-year pro forma in less than 2.5 years. So no one was complaining at all.
Yeah, might as well sell, right?
Exactly.
So once you did that first deal, you guys, it looks like you've done over 1,100 units, 160 million in assets under management. How did you scale from that point? Did you guys just keep, you found your model, you kept rinsing and repeating, or did you change the structure, or has it kind of stayed the same since that first one?
Well, I haven't worked with those partners from the first one again. Actually, they were permanent partners, the two of them, and partnered with me for just that one deal, and
right.
it just didn't work out for us to partner again together, which was fine. I did find some partners that I've done a few deals with, but I've also been doing a few projects deal by deal with other partners. Yeah. The majority of them I've been a lead general partner on, part of the lead, the asset management team and everything. There have been a few deals I've done as a co-sponsor where I'm helping raise capital and I'm contributing to asset management, but I'm taking more of a backseat role on the project as a whole.
Nice. Yeah. I mean, each deal is different. It depends on your skill set. You can fill different roles. So love to hear that. Let's just jump right in. I mean, you mentioned asset management, and that's what you put in the application for the show. Asset management is your forte. So let's talk about that. Asset management is, when you have multiple properties and being able to get a good overview of everything and how it's performing and making sure that they're all running according to plan is harder than it seems. So what are your top tips, I guess, when it comes to asset management and being an effective asset manager?
Yeah, absolutely. So the importance of it can't be overstated, because back like, for example, that first deal I did in 2016 in a cap rate compression environment, we didn't know what we were doing yet then, honestly. I kind of look back at how we managed that one and kind of have to laugh a little bit. We could have done so much
we
better.
Got lucky.
Yeah, well, we did good, but there was so much more that we could have been tracking, should have been tracking, that we just hadn't learned yet. But that's what happens in a compressing, cap rate environment is, the rising prices gloss over, mistakes. And we're just not in that environment anymore right now. Right now we're in an environment where the two biggest things that can, make a difference between whether a property succeeds and fails is the debt that you place on it and good, solid asset management. So I came up with, I was a military guy for a long time, so I like acronyms. So I have a set of principles I could just call my M3C3 asset management principles. And that stands for manager, meetings, measure, cash, construction, and community. So they just kind of keywords to remember some of the big things there.
Oh, I get it. M3C3. So three M's, three C's.
Yes, yes.
Okay. All right. Go over those three M's. I was stuck on the acronym, so I didn't take it in. Go over your the three M's and three C's again. What are they?
Sure. So it's manager, meetings, measure, and then cash, construction, and community.
Interesting. Okay. I've never heard it broken out that way. I love it. Why don't you take me step by step through each one? What do they mean? What are the key actions that you should be doing in each one?
Sure, absolutely. So the first thing is manager, and the whole point there is that your property manager is your absolutely most important partner on the deal as to
Mm-hmm.
how it performs. A lot of people will say that your lender is your most important property, and yes, it's true that they bring the majority of the money to the table. So I won't argue with that either. But in terms of operations, they're not really involved. So it's your property management company is or property manager, depending on the size of property you're dealing with, is your key. Even if you're starting off with a smaller multifamily, like we were talking about before, that I didn't do. If you're doing the 5, 6, 8 units, 10 units, something like that, to scale, you're absolutely going to have to get a property manager at some point, even if you're doing it yourself right now. So the big things are include their whole team in your communications. Respect their chain of command, because you don't want to be giving instructions to your site manager or the maintenance tech that you're not relaying to the regional property manager who supervises them. Trust but verify, inspect what you expect. Okay, coach them, build relationships with them, incentivize performance. With your site manager, we've done that. Some people do that on a regular basis, and I've done that on a couple properties. I've also done that on that very first property that I mentioned when we were getting close to a sale. Then we put an incentive program in place to hit certain
And that's
total
like
income targets.
they get, I don't know, $500 to have a turnaround time that's less than 2 weeks or something like that. Just those kind of performance indicators.
Exactly.
Yeah.
Exactly.
Cool.
So, and then have backups ready in any market. Have a couple backups ready, because if you do have to change, then it takes some time, and you don't want to be looking for others that right then. You want to already have someone in mind that you can switch over to if you have to make that tough decision.
Yeah.
So.
No, that's really good. And I 100% agree. Your property managers, they are worth their weight in gold. So I love that that's your first M. The second one is meetings. What take us into that? I mean, meetings, it can mean a lot of things, obviously, but
Sure.
I'd like to hear your take. What is it?
Yeah. So my point there is to have organized meetings. Don't spend an
Yeah.
hour and a half on a call trying to go through every KPI there. Don't be just opening up the reports right then. Have already gone through the reports and have your top 3 things you want to talk about on the meeting, and just to respect everybody's time. Have the right people there. Assign responsibility for actions that are being discussed, and hold people accountable. And I also like to train the site managers to try to, unless there's something that's high priority or an emergency situation, try to hold things to send us. Don't be sending us stuff on the same property daily throughout the week. Wait until the day before the asset management meeting, and then send those things over there. That way we're addressing those once a week on time, unless there's something important that obviously they have to use their judgment for that. And similarly, if your sponsorship team is larger, then have 1 to 2 max points of contact that site manager and regional property manager are dealing with. So you're not overwhelming them with like 5 or 6, 7 people, and all you end up arguing amongst each other or drowning each other out on a call.
Nice. I like that. And meetings, having a well-run meeting is so crucial. And I love that you said, prep for your meetings before you do them. That's something that I've been doing a lot more recently, and it just makes the meetings run so much smoother. I'm curious, how do you structure your, I don't know if it's weekly, monthly syncs that you do with your property management company? We have individual property managers, and we go through, shoot, I can't remember. It's leasing, operations, projects, and then other, I think. I can't remember, but generally we go through, units that need to be leased, turnover, how they've been, operations. How's the operations going? The projects, what projects are you working on? What's the status? So how do you structure your sync meetings with your property managers?
Yeah, so I won't say that they're all the same or that I'm doing this the best on
Mhm.
all of these. And some of these, especially that I've had longer, we just sort of fall into a rhythm where you're doing the same thing. And I recognize that maybe we should do things better for next time kind of thing. But in general, you look at the at collections and occupancy, leased occupancy, vacants, resident activity, what's going on there, any unit turns that are in progress or expected, or renovations if you're still executing a value add business plan doing unit renovations, and look at at collections, and then once a month also look at the your pricing both for new leases and for your renewals. What are you offering for your renewal offers for the next couple months? And as part of that, looking at your lease trade out growth also, both for new leases and for renewals. So,
Very cool.
yeah.
All right, I just took a peek at the clock. It looks like we're running it down already, but we
Okay.
still got four more KPIs to go, or acronyms to go through. So measure, do us a quick overview of measure.
Sure. The big thing here is to measure what you want to manage. You can't manage it if you can't measure it. So this is all about having the right KPIs, key performance indicators, and that you're drawing from the right reports. And I actually have a giveaway for the audience at the end that something I put together. I was always looking for was a breakdown of what KPIs should I be looking for on a weekly basis, a monthly basis, a quarterly basis. I never found that anywhere. I just found a bunch of KPIs. So I ended up making this up myself. And that's something I want to be able to offer for your audience.
Nice.
So
That is a very kind and useful offer. So I'll plug that at the very end.
sure.
You guys stay through to the end, and we'll have that KPI checklist for you. All right, the three C's. First one, what is it?
Cash and financial management. And this is just about understanding the financials, understand accounting. You have to be able to speak accounting. It's the language of business. Understand the cash flows, the cash requirements. You pay attention to your budgeting, your budgets, your reserves, your distribution management. If it's a syndication, you're distributing cash flow to investors. All these things matter. They all impact each other. And your reserves, you should be looking at, do you have enough, like once a year at least? You should be looking at, what changes have happened over the last year. Has the insurance policy changed? Has the deduction changed? I'm sorry, the deductibles. Have the limits of coverage changed at all? What impact does that have on the amount of reserves that you need to have? So all things like that.
Very cool. I love it. Second C.
Second C is construction management. One team member should be assigned as a lead for construction projects that you have. Hopefully you have someone that's good about that. If not, then you can work with a construction manager on the property management team. But also, it's just a lot of asking the right questions and learning to be diligent, comparing scopes of work, making sure you're comparing apples to apples, the scopes of work, and not apples to oranges. Looking at if you're doing unit renovations, are you contracting them through a third party or are you doing them in house? Looking, tracking the costs and both, what your actual costs are compared to what your pro forma costs were, and then making adjustments based on all that.
Nice. And I like that you put one person in charge, on the team of construction management. I've been in projects where some people are responsible for some parts of the project, some people are responsible for the other. It's just a nightmare. Somebody has to be the overall project manager for the construction side of it. So love that.
Absolutely.
Last C, let's hear it.
Last one is community. This is the one that a lot of people tend to overlook. Okay, so we're dealing with people's homes. This is where they live. So building a sense of community amongst your residents is a profit building endeavor for you, because the better sense of community are, the higher the tenant satisfaction is going to be, the lower your turnover is going to be, and hence the lower your turnover costs are going to be. And there's a lot of different things you can do to help build that sense of community, whether tenants events. I don't know where that came from for a second. Holding resident events, raffling away a prize at the holidays, small little tokens, putting out pumpkin pies at Thanksgiving for your residents, having a pizza night once a quarter or something like that. There's a whole lot of different ways you can build community amongst your residents.
Yeah, absolutely. And I mean, I back when I was living at apartments, I remember the apartment that I was living at actually did pretty good community events, and it made me want to stay there because I liked the people I was living around. And so it
Yeah,
makes a lot of sense to me. I like that that's one of your guys' pillars. And so that wraps it up. We've already gone through our time. I'm gonna have to push us into the quick question round. Are you ready?
absolutely.
All right. It starts with books or any form of education. Give me two recommendations, one for general life wisdom, one for real estate specific.
Okay, well, general life wisdom. I'm actually reading the book Traction right now to go back to improving those meetings that we do.
Nice.
And then real estate specific. Since I'm talking about asset management, I'll have to throw out our friend's book, Best in Class by Kyle Mitchell and Gary Lipsky.
All right.
Great book about multifamily asset management.
Nice. Traction and best in class. Good recommendations. Next question is for your younger self. So let's go back to the Greg who was just starting out. He was just doing that first flip way back when. Go back to him, look him in the eye, give him one piece of advice moving forward.
Um, I'd say the biggest thing is keep up the momentum. My momentum was too slow at first. Even once I got into multifamily and got that first deal, I had to move out of state for a year, and I didn't understand is for family reasons, and I didn't understand how to continue looking for properties in Arizona from being in Wisconsin for a year. And so I just kind of put things on the side until I moved back to the West Coast. In hindsight, there's things I could have done, but I didn't, and so I would go back and smack myself upside the head about 6 years ago for that.
That's something that you don't often hear about, but I think is very important is momentum and keeping it going. Because you're right, even if you're in a low period in the business that you do run, if you're people have all the different types of strategies out there, fix and flip, buy and hold, wholesale. If you're in kind of a dry period, it's easy to just kind of get lazy and let it go and start to do other things, go off to do a new project. But if you just keep that momentum going, get one thing done every single day, you're not going to regret it, because you're right, momentum is key and it builds on itself. So the more you get done, the more appears and the more you can actually do. So love that. Moves us to the next question. This is about the metros. It's a big world out there, a lot of opportunity to invest. Give me one metro in the United States that you're most excited about investing in today.
Well, I'm still really bullish on Phoenix,
Okay.
Arizona. So that's where I started at. That's where I have the majority of my connections. And some people are talking, down about that over the last year. It's had a little bit more of a downturn than some, but that's after having 27% year over year rent growth last year, having it take a 0.5% dip or so this year isn't all that surprising. There is so much new in-migration going there. There's new jobs. There's a lot of higher paying jobs that are going there, a lot of tech jobs. It's becoming a huge tech mecca right now. So I'm just very bullish on the long-term viability of that market.
All right, Phoenix. What is your favorite way to find good deals?
Favorite way to find new deals. I don't have any real great secret there. It's really just about keeping up with the brokers, keeping broker connections, keeping building relationships with them, making sure they're thinking of you and sending you stuff that's off market, not just looking at the listed deals.
Yeah, well, that's the beauty about marketing, is there is no big secret. It's just you got to do it. That's what it comes down to. It's all about volume. It's all about looking at deals, reaching out to brokers, getting in contact with people, sending out your mailers, all that stuff. You just got to keep doing it. Eventually, it's going to work out.
Absolutely.
All right, next question is for mentors. None of us are islands. We all stand on the shoulders of giants. So give me one mentor who has contributed significantly to your career today.
Well, the one I think of the most, I'd say would have to be Brad Sumrock. It was his educational program that I jumped into in the beginning. It's how I first heard about multifamily and syndications. And I never would have gotten started without, hearing him speak at an REI Expo almost 10 years ago for the first time. So he got me my start, and I'm forever thankful for him for that.
Nice. I love it. All right. Our second to last question is about your business. The first three positions we hire form the foundation of our business. So what were the first three positions you hired for, and would you do it differently if you did it again today?
Well, I haven't hired three positions yet, so
All right.
but right now. So our business, we partner with other general partners right now. So it's me and my wife working together, and we do have a VA who is heavy on social media, and tech, and putting marketing together for us. So that is where we started, moving towards hiring an executive assistant here in the very near future, although he's kind of doing some of those things for me right now too. The next big thing is going to be hiring an underwriting assistant, or bringing on an intern as an underwriting assistant.
Very nice. I've been thinking about that myself, just because, I look at so many deals and underwriting takes so long. It's just like getting all of that data, putting it together, hiring somebody to actually at least get the structure built, that would save a lot of time. So makes a lot of sense to me. All right, moving on to the very last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, learn a bit more about what you guys do there, and learn about that KPI checklist. So where can they find you, and where can they get in touch with that, get their hands on that list? I cannot talk today.
Quite all right. So yeah, absolutely. So best way is to download that KPI and report checklist, which is at a short URL is bit.ly/KPI checklist, all ran together. So again, bit.ly/KPI checklist. And when they download that, that will give them options to schedule a meeting with me, or access to our website and everything to learn a little bit more about us.
Cool. Yep. And that is a bit.ly. So just it's bit.ly KPI checklist, or /KPI checklist. I'll put that link in the show notes. So if you guys want to reach out to Greg, get that checklist, just click the more in the description. It'll pull down the full description, and in there you can find that URL. Cool, man. Well, that wraps it up. Again, thank you very much for hopping on the show.
Thanks a lot for inviting me, Gabe. Appreciate it.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions whatsoever, reach out to me, Gabe with realestateinvestingclub.com. And if you guys want to support the show, all we ask is you give us a like, subscribe, share. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode.